This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Welcome to Breaking Banks Europe, episode 126. I am Paolo Sironi, your host today, and today is special. I'm happy to launch the first episode of Breaking Payments, our new podcast series dedicated to the innovation in the payment space across industries, technologies, geographies, and business models. And this first episode is powered by PPRO. You all know PPRO, an industry trusted provider for local payments infrastructure that powers global growth for payment companies. Now, payment modernization is a foundational and mission-critical business for any digital solution. We all know why. Because a seamless and secure payment experience is an essential element to eliminate friction in user journeys. This has no industry boundaries, no digital analog restriction, no geographical confinement. Payments are also a very exciting contending space in which most of the fintech unicorns and the non-banking platform providers that aggregate financial services under their umbrella challenge the banking primacy globally. They are actually ahead of banking. And the two words which I want to stress in today's episode are unicorn or growth, and global, in short, how to grow globally. With that in mind, in this first episode of Breaking Payments, we will learn first how added value can be generated for clients in the payment space. Second, which are the operational challenges that payment providers have to resolve. Third, which are the key differences among markets that needs to be resolved when scaling from local operations to a global presence. And fourth, which is the winning culture, how inorganic growth can foster competitive advantages to succeed, especially when targeting distant markets. In my banking career, I worked for a bank that merged twice. And I founded a startup in Germany that was acquired by IBM in 2013. I have learned the pains, but also the amazing gains. And today, I want to hear from our speakers about their experience and their suggestions. So it is my pleasure to introduce our guests today, which represent PPRO, a fintech unicorn in its making, Azimo, a payment fintech recently acquired by fintech unicorn Papaya Global, actually pending regulatory approval, and Ripple, a fintech unicorn itself. So let me start with Xavier Balaure de la Paz, the Chief Operating Officer of PPRO. Welcome to the show.
Thank you. Thank you for having me, Paolo.
I'm also glad to welcome Dora Zambia, the Chief Operating Officer at Azimo. Welcome, Dora.
Welcome, everyone. Thank you for having us.
And let me introduce you to Sandy Young, the Managing Director for Ripple in Europe. Welcome to Breaking Payments.
Great to be here. Thank you.
So then, let me ask our guests just a few introductory questions before we deep dive into today's topic. Xavier, how did you join PPRO, and what do you expect from today's conversation?
I joined PPRO through, or I decided to stay at PPRO through an acquisition that PPRO did 3 years ago. PPRO acquired a company called Alpago, of which I was co-founder and CEO. And from the very first moment, when I met PPRO, I was super excited to the challenge that they were trying to tackle, and that's why I decided to stay.
So Dora, in 2 sentences, tell us about your experience at Azimo.
In 2, it's been 8 years that feel like 20. It's been an amazing journey of growth, and I've learned a great deal.
Good. And Sandy, I think you joined Ripple very recently from MasterCard. What is your new role?
Yes, so I manage the European region at Ripple. I joined just last June. It does feel like a lot longer. And I've been at MasterCard. I was 5 years. I was working very much at the intersection of payments and technology, a lot of emerging technologies. But with the obviously growth of the blockchain crypto space, I really wanted to jump on board, be at the heart of the industry, and be part of that massive change and be in that sort of driver's seat with a lot of other people in this sector. So,
cards to totally cardless in essence. So let's deep dive and get straight to the core of the discussion, or I believe is the core of the discussion, the problem or the opportunity to generate added value. Xavier, I really want to get your opinion about this. Can you give me examples on how payment providers and infrastructure can add value in the payment space?
Yes, for example, I can give two concrete examples. No? One is more towards fintechs, like, for example, Stripe. So we partner with them to innovate and provide more payment methods in the market. So not everyone, I think, can keep up with the pace of companies like Stripe. So if you think about it, they have 1,400 new companies joining them every day. That's 500,000 a year, which is a lot. And so, for example, concretely, we were trying to see with them how can any of their clients have access to the payment methods that are relevant in Europe, but also in APAC and Latin America, while at the same time not going crazy and doing the whole onboarding, screening each one of them, doing KYC, etc., which would be totally unfeasible. And so we build a solution with them, doing payment methods that would be available at the same time at the very first moment, but would only onboard in the first transaction when the first transaction happens. And that dramatically increased the adoption of payment methods. That is one, is like, can you keep up with these new innovators? But the other one is also companies like, for example, BNZ, which is one of the biggest acquirers in New Zealand, are trying to have a customer base, have a lot of merchants on their side, and they struggle to be at the forefront, of technology, like Stripe was doing. And so how can we help them provide them technology and be cloud-based and provide the boarding, all the features, that Stripe can do for them in the market. And that's also something that we can do for them.
So in essence, the infrastructure has to facilitate fast onboarding of the them without reinventing the wheel in secure commerce, right? So that's one way. And it enables multiple parties to join a standardized framework that can get specific in their location, because not all locations are equal in terms of jurisdiction, in terms of challenges. And I also want to deep dive a little bit into these differences today, because our audience is global. We have a special focus on European markets, but we have a global audience. So it will be good to learn from you guys today what you believe are the key differences across the board. So now, having heard from Xavier, I would say that one of the things that payments is looking to resolve is the problem of the market efficiency. So this is a very pervasive industry, and the markets are not necessarily efficient. Some segments more than others, but in essence, many contenders are, if you like, competing in order to streamline and automate and basically win the heart of all the other players to be working with the platform, which leads the question in the direction of Sandy, as Ripple is very innovative in the way it is tackling the issues of the market efficiency. So how do you think that this can be effectively tackled and resolved?
So this, I think, also ties into the previous question around the sort of where can we add value as well. I think so. The reality is that current payments infrastructure, financial services infrastructure, was built in the pre-internet era, right? It is decades old, and it is not fit for purpose for the way we live and operate today, which is a lot more global, on demand, and instant. We want everything at the click of our fingers. When you look at, for example, the cross-border payment space, right, there's still, $2 trillion of dollars of payments that are sort of trapped capital in destination accounts. 6% of payments get lost. It still costs, about 7% in fees to send money abroad. And with all of those inefficiencies, I think where sort of crypto and blockchain, adds value and addresses some of those inefficiencies, is really bring this ability for instant settlement, creating new sort of lines of liquidity, and providing ability to make those payments again instantly, preventing the need for these locked capital around the world, so that the companies that we work with can use that to actually grow and expand their business. I think specifically around the sort of some of those like kind of challenges, I think liquidity has been a big challenge underpinning the crypto space. And that will really underpin sort of the enterprise adoption in that space. Because again, if we look at some of these, maybe if you're sending, US dollars to euro, not such a big issue. But when you come out of those G20 markets, right, if you want to send an Peruvian salt, Indian rupee, still there's kind of lack of liquidity and challenges out there. And really, I mean, today the liquidity in the crypto space has been growing significantly, but still limited to a handful of exchanges. With it used to be limited to a handful of exchanges with a few $1 million of volume across all assets, and that's significantly has been growing. Yet it's still very fragmented, a bit similar to traditional FX markets. With maybe a bit of an exception that it is a bit more focused on the crypto exchanges. But really what we're seeing is like, even as this fragmentation grows, more and more companies, institutions wanting to offer crypto services. And that's one of the reasons, again, we are, we're offering more things. We've recently announced our liquidity hub solution, which will basically help companies essentially source, digital assets as and when they need at the most optimal prices.
Sandy, do you think there are more opportunities to eliminate inefficiencies in cross-border operations or within jurisdictions?
I mean, there's a lot of efficiencies. The space we've initially been mostly focused on has been the cross-border payment space. I think that's where particularly crypto and blockchain solutions can add a massive amount of value. I think within jurisdictions, it's not perfect and it's not all nice and green. Having said that, I think there's been a lot more innovation, a lot more adoption of sort of real-time payments solutions, etc. Again, really depends on which country, which jurisdiction around the world you're looking at. I think from a jurisdiction differences perspective, I think regulation is, the biggest difference. We see a massive range, which maybe we can talk about it a bit later as well.
So a question to Dora. You are a money transfer provider. So how do you resolve the inefficiency problem to give value back to customers?
Yeah, if we're going to talk about the obvious inefficiency of price and speed for consumer payments here for cross-border, and I'm pretty sure I know that everyone here on the call has lived in a country not from where they're originally from, potentially at some point in their life, or potentially continue to do so. And that's something that has been happening for decades, and still it's one of the most cumbersome processes. And Sandy also quoted the 6 to 7% cost, but also the onboarding, particularly when you're a new person in a new country and don't have a bank account. So the first step for us was to do this digitally instead of doing the brick and mortar, which was originally the model of the likes of Western Union and MoneyGram, which they continue supporting at this moment. But the first step was to go digital, to also be able to reduce the cost on that side, because more people have mobile phones now. Potentially more people have mobile phones than have ever had laptops or desktops. So Azimo is the digital money transfer cross-border payments company, in other words. And that was the first step in reducing the cost by simplifying the value chain. The second thing, of course, now has become speed. To Sandy's point, we're so used to, can I call it instant gratification? We expect the money to be there right away, particularly when we're sending money to our loved ones, when someone is bugging. Quite customer stories we hear are always like, oh yeah, I need to pay the school fees, or I need to do something, and my relative needs the money really urgently. everybody needs the money really urgently, but some of the payment rails do not work in that level of urgency. So this is what we've been building for years in Azimon, trying to make those payments as seamless as instantly as possible and at a much lower cost. There are a couple of other, obviously, fintechs working in the same space, and I think the prices for these players and what we offer is way below the 6-7%, not even in most cases below 1%. So this has been our mission for many years, and I think we've succeeded to a certain extent, but the market is vast, right? There's reported 800 billion per year sent in remittances. That's the reported. At another 40-60% unreported, you're getting a pretty large market on the consumer payments.
I actually wanted to discuss a bit about the size and opportunities in this large market. But before we get there, I have a question for Xavier. You heard from Dora. She said cost and velocity are the two key ingredients that allow them to generate value for consumers. So how do you believe the infrastructure is addressing both elements? So cost reduction and the velocity of the transaction in a secure way?
I think Sandy was pointed out, very well on certain of the challenges are coming because the market is very fragmented. But at the same time, as users, we're getting used more and more that we can go to anywhere in the world and use services anywhere in the world, and then we expect that payment, goes as well and as fast as hailing a cab with Uber. Should be as seamless and as easy as possible. And I think depending on the jurisdiction of the markets, there are certain markets that are arriving there. But definitely when you're starting to go into the complexity of trying to do that globally, the infrastructure is definitely not there. There's not the interconnection. The technology is very old. It's still crazy. The banks still use text files in order to reconcile transactions. I just don't understand that still happens. But also is because the industry is so hot, there's a lot of M&A that is happening. We are an example of that. Dora is also maybe now an example of that. You have all these multiple platforms that have been added into the system, and they're not well synchronized and well connected. And that is something that we're really trying to help, not to orchestrate all of these connections better and to have consistent flows, consistent points of data that you can receive and build the products on top of that. I think there's still a lot to do.
So Dora was mentioning the size of the market and also the remittances market. We all know that the number of banks carrying of remittance businesses has been shrinking in the last 10 years. So the margins are still there because it can be expensive for the users to access those services. But in essence, overall, traditional bankers are seeing payments more and more like a cost center instead of a revenue center as it used to be in the past. However, they might be missing the point because payments is an invaluable source for revenues when seen horizontally across organization for the generation of new business models. In essence, the nature of payment is changing from a business perspective to facilitate the transformation within the industry definition, the banking industry definition, and beyond the borders of the banking industry definition. So, Xavier, we'll get back to you to start this more conversation around how do you see the payment space evolving in terms of how the various actors are positioning, how is the market is transforming in terms of margins, or how is the competitive landscape going to be shaped by different technologies?
I think you're right that the last decade banks consider payments as being a cost center, and actually some of them went out. We have, for example, certain clients of us like Deutsche Bank or Citi that are coming back to payments. And the reason for that is that payments is the base with which you can offer all the financial products. So if you don't have the base of the transaction, then you need to deal with one or the other. It is very difficult to offer treasury services like FX or providing liquidity, even loans. I don't know if you know, but for example, in China, Alipay in just 5 years, I think, and financial to be concrete, in just 5 years, they managed to take 20% of the loan market to merchants. They are so strong in the payment services that they're offering to their merchants that afterwards they have built a connection to the banks in order to provide loans in a matter of seconds. So, and because they have all this information about the transactions, the banks are really able to receive the information that they need to price properly and bid for that loan to merchants. So I think banks and other payment players have recognized that and has totally changed their opinion on payments. And that's why you also see right now companies are starting to say embedded finance, which is basically with the base of payments, be able to provide additional financial services.
You truly speak my language. Two emerging strategies are occurring in financial services worldwide. One is the contextualization of banking or embedded finance more in general. And the other one is the primacy of wealth management to transform the relationship with clients. Now, if you think about the traditional bank, a bank used to be a credit institution with services on the sides like payments and then investment management insurance. Now, the new starting point in these two strategies to recreate business models are payments when you create a platform engagement across your boundaries. So that's the starting point, it generates the data, or the framework for planning and wealth management. And today we focus on the first of the two. So payment, as we're breaking payments to understand how this is the new foundations of the next generation of business model in the financial services industry. And Sandy, Ripple is definitely at the forefront of this. So how do you see the competitive landscape transformed by providers like you that excel in the usage of technology, new technologies to create a different type of interactions among the participants?
Mm-hmm. Yeah. I mean, I do see the sort of the impact of like crypto and adoption of blockchain and payments just as like that next phase of evolution of payments, right? Because payments have been going through a massive transformation with, increased digital adoption, accelerated by COVID, obviously, more increased adoption of real-time settlements. Also, spurred by regulation in some parts of the world. And I think, again, crypto blockchain is kind of the next, phase of this. And in a way, I mean, I see that like what is payments, right? You are moving money from one place to another place. I think just looking at it as money is in a way very limited in today's world as well, because we are in a place where we're seeing that everything is being tokenized, and we believe increasingly will continue to do so, right? I mean, last year was this massive year of a massive boom in NFTs. So from anything from like real world assets to digital assets, everything is being tokenized. So more and more, I believe like that ability to move value seamlessly across the world on demand when you need it, efficiently at a fraction, almost at no cost, is going to be increasingly important. And I think that's where blockchain and crypto has a kind of massive advantage and enables this. I feel that this is really the first time we're able to create these very digitally native experiences and ways to move value. I mean, with Ripple from the earlier days, basically, it's. I mean, I actually don't know any other company like that who has really focused from early days using crypto and blockchain solutions to address a very specific use case around this cross-border payments. And there's been obviously lots of hype cycles and speculation, and not really just following those, but solving those issues, because that's where the sort of big value I believe is. And we've been partnering with enterprises, and lots of different parts of the ecosystem, from banks, which we've been talking a lot about, from more like payment service providers and others, governments, regulators, in a number of ways, because the change is all across the ecosystem, right? All the central banks are looking at central bank digital currencies now, right? Whether they're in research stage or more advanced pilot stage, or in China's case, or already at massive adoption stage. I think it is important. So I guess the point is the transformation is all across the ecosystem. Crypto is kind of the next and the latest phase of that evolution. We've been focused on basically solving this use case from early days with crypto and blockchain, and we're seeing that more and more those partners, various ecosystem players that we've been sort of speaking with for years, are almost coming to us, and particular banks again looking at like how do I get on the crypto journey? How do I put it as part of my strategy, because I want to be part of that future.
Sandy, thanks for your answer, and I actually like it very much, because success in payments is about success of the ecosystem, because payments is about the ecosystem. Now, we have to engage in a little stop for 10 seconds. We have a commercial to share, but everybody stays with us. Less than 10 seconds, we're back discussing breaking payments.
Let's talk about the future of payments. Your Breaking Payments exclusive series is here, and we are ready to showcase how fintech has deconstructed the payments industry and is rebuilding it seamlessly as an embedded experience for the client. Stay tuned for new episodes every month on Breaking Banks Europe.
Welcome back to episode 126 of Breaking Banks Europe, and today we are enjoying the first episode of our new series, Breaking Payments. I'm here with Sandy Young of Ripple, Dora Ziambra of Azimo, and Xavier Vallaure from PPRO. Now, we've been discussing a few things about what is happening today in payments, how technology is changing the relationship among the participants. And I want to understand a bit more from our guest about the key challenges and what we can expect in the future. I started dropping an idea myself, but feel free to develop your own. If you think about the history of payments, we know that one of the first, if you like, a breakthrough moment was the creation and invention of the ATM. So basically, before, if you wanted to buy a Gucci bag, you had to go to your bank, queue up, get all the cash, go back to the shop, and put them on the table to get the Gucci bag. Now, with the ATM machine, you didn't have to queue up. You went to the ATM machine around the corner, put the card inside, and get the money out of it. But that was not enough. The second thing that happened was the invention of the credit card. So now you didn't even have to go to the ATM machine. You could present the credit card and get your Gucci bag. Now, what is the essence of this? The essence is the bank, the ATM, or the credit card are a proof of identity. So in essence, the real essence of payment innovation is the creation of a mechanism basically to prove that you are trustworthy as an individual, that your identity is as such, and you have money in your account. Now that you are shifting our digital, we cannot think of payments transformation without the transformation of digital identities, especially where we consider very complex ecosystem that needs to operate the one with the other. So I guess that in my view, the future of payments is also the future of digital identities. Xavier, what is your take on this?
I agree. It's very interesting what you're describing, because when I was studying payments, someone was explaining to me all the different players in a digital transaction, from an acquirer, an issuer, the company that is helping you to identify, etc. And then he was comparing that when you go into a restaurant and you're paying cash, which all of that industry disappears. You just hand in your $10 bill or €10 bill, and then that's it. So it is incredible that the moment that you don't see the other and you cannot trust this other person, the whole industry, that generates of that. I think you're right. I think there is a big component about identifying not only the end user, but also the merchant. There's a lot of fraudsters that are hiding themselves behind merchants, in order to get money. But that is only one component to it. I think there are new experiences that didn't even exist before. So we have, for example, a big belief that in the future, any end user should be able to pay however it wants anywhere in the world. is not even about that if you're in a specific country, everyone is paying with, I don't know, in the Netherlands with Ideal, or if you are in the US with a credit card. It's just that anywhere where you are in your virtual world or in the world, you should be able always to pay the way that you like to do. And that makes it extremely complex for the merchants, but also the payment companies to know how to implement that, how to recognize you, how to recognize your preference. Because in the end, if you're a merchant, what you want from payment methods is to finalize the transaction. That's the most obvious one. The second, can you get me more clients, to my products that I didn't even know? Because you already know them, by the payment method. And the last one is, can I do it extremely efficiently, either cost and speed? These are the three elements that a merchant is always thinking, and I think these are what the infrastructure needs to move in order to make the system work better.
Laura, what is your point of view?
Ooh, it's quite complex. I do almost see. I'm kind of going to go a little back into a point that a lot of companies or payments companies, whether they admit of being payment companies or not. And if you were to give you examples of gambling companies, they're very good at doing payments. The likes of Spotify, they're very good in payment systems. So because any service that's digital requires payments, and the merchant, to Xavier's point, wants to get the money. And so I think this makes it quite interesting and challenging at the same time, especially when you go global, because you want to offer all pay-in methods and all payout methods, so the customers can use it and don't have to think whether, can I use my US credit card? Can I use my Alipay wallet? Right? We want to offer everything. I think this is going to continue because fragmentation will continue. Even though there are interoperable real-time systems, in most cases we see quite a national view. UK has faster payments, Europe has SEPA, whichever one. I think Singapore and Hong Kong are now connecting the rails, but yeah, globally you need 100 payment methods, probably a long page of 100 things to use, but the customer doesn't care particularly. They just want the one that they want to use. And I think this is where we see the emergence of a lot of players that do the orchestration. Can you hide everything and just give one? Just pay. Now, and because this is so complicated and fragmented, I don't see it going to free unless we go down the path of a functioning blockchain, which we don't even agree on that one. I let Sandy expand on that. I think we will remain. I think more and more consolidation of putting everything in one payment method is because that's what the consumer is looking for. But I also don't think it will be for free. If we were to go back and think of, let's say, interchange and scheme fees that credit cards charge, right? Those are there and they will not go away because the banking infrastructure has not become efficient when it comes to payments.
So Dora, while answering, you generated an hyperlink as you talked about the differences across markets. I want to put it there. I want to click on it and get back to you in a second about that because that's important. But before, I want to address my previous question to Sandy as well. Now, Sandy, what's in the future of payments? The QR code or the blockchain? The CBDCs or the crypto or still the US dollar?
All of the above. I agree with Dora, right? I think it's going to get, we've talked a lot more about different sort of payment methods, consumers wanting choice, which yes, all of that I think exists, but it's going to get even more complicated, right, with this greater adoption of crypto that we're seeing not only on the retail side, but also on the B2B side as well. And with that, right, not only your credit card, etc., open banking acceptance, but then everybody wants to pay crypto and with their NFTs and CBDCs and instantly interchange between them from your wallet all at the same time. So I think that's going to be the future reality, and I think that's companies like Ripple. I think that's what we're here to enable. With that kind of still fragmented, and the reality is a lot of these crypto, right? They're created for different use cases, and that's why I believe like they're gonna remain, and that interoperability will be increasingly important. So I think That's what we're looking at, XRP, which is the digital assets we use to bridge between basically two fiat currencies today to move value across the board. That can play a increasingly bigger role to bridge that gap and enable that interoperability, which will be even more important in the future.
Okay, so Dora, Sandy is enriching the Apple link. We said that there are differences across markets, and now we also have the metaverse market coming, so a lot of variety. So can you tell me, where do you see the major differences? Think about companies that want to scale globally, so they have to tackle all of these issues, so they need to find a criteria to navigate through.
Yeah, there would be two angles. Three. One is regulation. We already mentioned regulation is different in each jurisdiction. So, and that cannot be, you cannot override it, right? It is what it is. You work with it. The second thing I'd say is consumer and customer preferences vary quite a bit in the remittance space. For example, in terms of payout methods, we see a lot of variation. Some countries prefer mobile wallets. Kenya and Ghana, the poster children, as I always say, of mobile wallets. Philippines now is becoming more a mobile wallet market, at least in cross-border remittances as a payout method. And then other countries are bank deposit, classic. You send money from the UK to Poland, you send it to your bank account and it's there within 5 minutes. So the customer preferences varies quite a bit. And the third thing I would also say is just the infrastructure. It's just different, right? Real-time rails, slow rails, we try, if there's no real-time infrastructure, the approach is to, let's say, connect to each one of the banks. You connect to the first 5 banks, connect them like 10 bottom banks, but this takes time. And doing an integration with a tier 2 bank in country X in a developing world, it's just quite heavy lifting, or they might not even have the API that you want. Then you might be sending files. So you have those limitations that you cannot overcome, and you have to find ways around it, essentially.
So Xavier, Dora is throwing a ball to you. She mentioned infrastructure across markets.
Yeah, exactly. I was waiting for you to give me time, because it's exactly what we're trying to solve. No, Dora is pointing out very well that depending on the markets, you have suppliers or infrastructure, that's more modern than the other. And what we're trying to do with the orchestration is to normalize that when you're trying to navigate and go global, that you're able to assume complexity as you're ready for it. And what I mean with that is, how much do you want to stay, let's say, authentic to the payment method, and the various specificities of how they do that in the market. So for example, I don't know, in Brazil, they have this payment method called boleto bancário, in which is a prepaid payment method, and you show a payment slip. It's very difficult how you handle, for example, your stock in an airline when you have a prepaid payment method, because basically you just know that you have a customer, but he hasn't paid, and until you don't have a confirmation of payment, you don't know if you really have sold that ticket. So you really need to rethink. And what we're doing is we're normalizing that so that you can deal with that all across the world. I also want to mention one thing, which is we mention constantly banks and financial accounts, etc. A lot of markets still have a lot of cash, and that is something that still need to be dealt with. There's certain payment methods that are trying to just digitalize that money and be able to handle it, but it's still tricky. And then the last thing that I want to point out is the importance of the data. I think one of the things that digital payments is really bringing into the market is providing lots of amounts of data that makes that the pricing is more accurate, basically, and that you can even lower the pricing. In the end, on financial products rely on statistics models in order to handle, know how much is the risk of a default if you're a merchant, if you're acquiring merchants, or a fraud if you're dealing with users, and all of that data and having more and more data allows you to price it better, basically.
So there's actually different habits across the European countries. For example, when I take a taxi in Milan, often I read the sign saying, we don't take credit cards. When I'm in the Nordics, there is a sign saying, we don't take cash. But once I got into a taxi that said we accept bitcoins, and I'm not sure that is worthwhile to pay with bitcoins. But then thinking, well, Sandy, what do you think about all of this and the differences that you have to face when you invite your clients to use your technology and your solutions for payments?
Yeah. I think, particularly in the crypto blockchain space at the moment, the massive stark contrast between different markets is really around regulation, I see, right? So you have kind of the, complete ends. On one hand, you have the sort of outright bans with likes of China, and, they want to focus on the central bank digital currency, and that's the only one that's going to prevail. On the other hand, you have sort of in the US more of a regulation by enforcement, a lot of industry bodies kind of trying to work out who's going to regulate what and how and when. And then you have more, I would say maybe, a bit more in between is places like UK and Europe, I would put the same way, but also other countries like Singapore, Japan, I think Switzerland are good examples where the focus is more around providing like rules of the road, more clear regulatory and licensing frameworks. So that you can achieve, all elements in terms of both sort of consumer protection, but also encouraging innovation and clarity in the markets. Because the reality is, without these kind of, I think, clear, consistent, thoughtful regulations, I don't think any country can really thrive sort of the way, the financial services payments is going with this increased adoption of crypto and blockchain. I feel very fortunate, honestly, being, focused in the UK with the business I'm focused on in Europe. UK has been a leader in providing sort of more clear guidance around crypto, but in general, even more in the fintech space. And I see a great opportunity to continue to do that and continue to be a hub for not just fintech, but crypto. And, some of the government has stated, clear objectives and ambitions to continue to play that role. So I think we're in a great place, lots of work to be done, but we're in a great place and I feel fortunate about that.
That's good. So today we talked about technology, we talked about interoperability, we talked a bit about regulation, money transfer, and now I want to talk about your experience to conclude. I said that we have today Sandy. She moved from MasterCard to Ripple, so quite a change in terms of corporate culture. We have Dora. She just got acquired, her company by another company pending regulatory approval, and Xavier, who joined the PPRO through an acquisition. So culture is an essential element when you grow, because you acquire not just pieces of technology, but you acquire talent, ways of thinking. And I guess it requires an effort on both sides to synthesize the new common framework that enables everybody to move forward. So I might start from Sandy, then Dora and Xavier. If you want to share your experience, some lesson learned, we'll be very eager to hear about it. Sandy.
Absolutely. Culture is absolutely very important. It's that kind of invisible glue that, binds everyone together and kind of marching towards the same. And I think it's really exciting, again, in a place where Ripple, I think where, everybody is a true believer. And this is the way, the financial services and payments and beyond, like how companies adopt crypto and blockchain is going to evolve. And I think that's a really exciting place to be for that angle. I think in a being in a very fast-paced growing place, it's always important to think about like keeping that dynamism, agility, being able to be very quick and turning things around and growing with your customers and being responsive, but also keep being able to grow and have those systems and processes and infrastructure to make sure that you have the efficiencies to enable that growth, but not let it hinder that culture and speed. I think that's something really important, and we're thinking about this honestly on a daily basis. In the London office, we have about 60 people and growing massively, hiring quite a lot. So it's a day-to-day consideration, and we're very proud of our culture. I would say at Triple, and it's a great.
There might be no middleman on blockchain, but definitely with talented teaming up, right, to make it happen. Dora, what about you? What is your expectation? What is your experience?
Well, given that we are not one yet, but we're very excited to be joining I would for sure say hyper-growth tech company, right? And that was important to us in terms of culture, in terms of are we willing to try and, as we say, quote unquote, break things, but also be very careful not to bring innovation without breaking. Because if you think that, Asimo has been focusing on remittances, Papaya focuses on payroll. Payroll is one payment you do not want to break. If your salary doesn't make it, it's even worse than the money you're sending to your mother or to your sister. So there is a very interesting combination of the two companies coming together. Culturally, we have the same, I don't want to also passion and vision of making payments as seamless as possible, but also being terribly aware of the importance of those payments that we do send before as remittances and now as in payroll. So we hope that the culture, as culture, what did Peter Drucker say? Culture, it's strategy for breakfast, is very important, because we are both willing to try new things and grow really fast and expand, but also be very careful of the detail, right? Given the context of the payments that we are making.
So Xavier, you made it happen. What is your experience?
It's funny, no? Because last month, so I came to People Through Acquisition, and last month we announced that we acquired a company called Alpha Fintech. So now I've been a little bit on both sides. I think for me, what we're defining our culture, for me, I even call it, a mission fit. I think if you bought a company, it's because you really like what they have achieved, and that they have a really a big sense of a mission and what they're trying to achieve, no? Which is what you described right now, Dora, in Asimo, no? And you want to keep that. And I think on the side of the company that got bought, I think sometimes you have the impression that you need to just embrace and abandon everything, because obviously you're the one, that get acquired, and they know better. And actually, I realized through time that actually you have a lot to offer. That's why they bought you. And at the same time, when you're acquiring, you want to give the space for that company that you bought, that they still are innovating, they're still doing, what make them special for you. And it's not an easy balance. What we realize is that one of the things that works the best is that from day one that you form a certain team that from both sides with the right seniority that is working together. What is this proposition, the 1-to-1 is equal to 3 together, and what are the details about it? Because that is what is going to make that every little step that you're doing is just reinforcing that you're doing that better together, but at the same time that you're giving the space to the company to grow as you expect that to do.
So I'm very pleased that we started discussing the modernization of payments, and we ended with a conversation about how humans are interacting to make it all happen. Now we are at the very end of today's show. I want to thank Sandy from Ripple, Dora from Asimo, and Xavier from PPRO. I remind you that this was episode 126 of Breaking Banks Europe, but actually the first episode of Breaking Payments that has been powered by PPRO. PPRO, as you all know, is an industry trusted provider for local payment infrastructure that powers global growth for payment companies. And that's a wrap.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.